Hey guys, welcome back to the Gibson Hustle, where we discuss different hustles of business and investing with the main driver to build wealth over time. This playlist is basically a weekly portfolio update where I hope to take you on a journey to grow 50k into $1 million over a 10-year period. This is going to be purely in the ASX and I'll be using the quality at value methodology. In the last week, we grew from 74 to 75k. But even more exciting from our side, we also finally hit a milestone I've been chasing, which was 100 subs. So we've just gone over that last week. So I welcome you guys and I really appreciate your subscriptions and hopefully we can grow it to 200 over the next few months. All right guys, let's jump into it. All right, to keep some structure to the video, you guys know the drill. We'll move through a few key areas. We'll have a quick overview of what the QAV stocks performance, both over the last week and since inception. Then we'll have a nugget part where you should hopefully learn something new each week. Then the income and owner contributions, which will lead us to an overall portfolio value. And last but not least, a bonus sign-off quote. All right, benchmark time. But first, shout out to Tom. In last week's episode, he commented about maybe benchmarking against an accumulation index, which includes dividends. Now I need to do some more research into this, but it seems slightly difficult to find a live chart to compare with in a few platforms that I use. I did a little research into what most people and fundies actually benchmark against, which is basically the S&P ASX 200, but don't mention the dividends. But leave it with me, I'll look into it a bit more. So we'll continue to use XJO for now. So how did they fare this week? Well, as you can see here, they were down 0.8% over the past week of trading. We've seen the market crash almost 3% on the Thursday the 6th, but it seemed to recover half of its losses on the Friday before close. Crazy times to say the least. So how did our stocks do this week? Honestly, it's not that exciting, but it's definitely not red. Only IVE Group dropped this week with 1.7%. But check out Michael Hill, up another 4.3% following its 21.5% rally last week. I was surprised to see investor sentiment hold up this week with the choppy ASX. Nonetheless, I'm a happy camper. So how did we compare against XJO? Well, overall, we were up 1.45% compared to negative 0.8%, so just under 2x. Alright, so since inception, we have a pure capital gain of positive 3.56%. The portfolio still has a dividend return of 1.95%. This gives us a total return of positive 5.5%. Now for the updates on the list, refer back to Ep 11 about 4.5 minutes in. The link will be above for what the terminology for each buy, hold and sell means. This week was again choppy, so we'll see the changes from last week. So here's all last week's buys, holds and sells. The ones that changed are as follows and why. So Aurelia became a buy as it closed above last month's price. This stock is still the choppiest of them all at the moment, so just be careful with this one. COG has moved to hold as it closed below last month's price, but is still above the sell. Clearview moved back from hold to buy as it closed above last month's price. ING, which I didn't expect, moved from sell to hold as it's above its sell line with the recent uptick, but not above the buy price of $4.08. Westgold moved from buy to hold with its recent drop of 3.7% last week. Remember guys, do your own research. Alright guys, so today's nugget section is going to be about candlesticks. We'll just do a real quick intro from where they came from and what they are in isolation outside of a chart. My information is sourced through a Wiki page. The link will be in the description below. So basically these images are a candlestick, and when they're grouped together with others, they form a candlestick chart. They are thought to have been developed in the 18th century by Japanese traders and introduced to the Western world in 2001. Look, I personally don't use these yet, but they are great for traders for both a quick visual representation of how the market is behaving, both intraday and over periods of time. You can either have them colored or hollow. If I was to personally use them, I would prefer to see the red and green, but each to their own. Alright, so let's break the candle down. This solid area here between the open and the close is called the real body. Price excursions above and below the body are called shadows, or as we know, wicks, just like in an everyday candle. The wicks show the highest and the lowest points of the asset being traded. The body obviously represents the open and closing price of the asset. Now to illustrate the color. Depending on the chart being watched, as they can be customized to user preference, if the asset opens and closes above the open price, it will signal green, hollow or unfilled. And as opposite, if it opens high and closes low, it will signal red, solid or filled. This is the visual representation that traders love. The range is then calculated by subtracting the low price from the high price. Usually when the body of the candle is long, this means the asset is being traded more intensely. Now this was just a real quick overview of a candlestick formation in isolation. If you want to hear more on these, I can elaborate further. There is actually 42 recognized patterns, which is insane. Just let me know in the comments below. Alright, so our cash account is still at 8229. So with our 8229 in cash, plus our 67,586 in stocks, takes us to an overall value of 75,815 bucks, which is about a positive 1.29% total portfolio gain from last week. Well, that's a wrap, guys. Please make sure you guys hit that like button, subscribe if you haven't, and tickle that bell to get notified when my weekly updates come out. If you want to see anything else in the playlist, please just leave us a comment below. I'll make sure I reply to you all. Now you guys know the saying, keep healthy and wealthy. See you guys.